Okay, welcome everyone. Good morning. Hope everyone had a good long weekend. I know I did. Let's get right into it. I'm going to cover some trade ideas. I've talked about these trade ideas in several videos. They're now starting to trigger. Again, most of my ideas are setups before their actual trades, and then they trigger, and then we take those trades and then manage risk. So let's get right into this. Leave me a thumbs up, and then at the end of the video, if you're interested in the training course, check the description below. There's a link down there, $99.99. Pretty good value for what you'll get. All right, so we're going to start out here with Snap. I had a subscriber. This is a new idea, but it's triggering right now. A subscriber asked me to watch this. I looked at it over the weekend. Looked good. I took a short on it this morning. Here's what I got on Snap. Here's your daily chart. All right, you got a big gap right below. See the gap right there? So there's an obvious target. Whenever anything's really obvious, usually you're not going to completely get there. So maybe we'll get close to filling the gap, but won't actually fill it. But watch for the gap to fill. That's the target. And potentially be ready to step in early and cover. Also, if you look at the daily, big negative divergence. Look at that right there on the daily. Right there, negative divergence. So all this price action up here has been diverging, negative divergent high. The PPO, you can see right there, we also have a bearish crossover. There's the bearish crossover right there. So the PPO looks bearish, pointed down. You have negative divergence on the PPO, negative divergence on Snap on the daily. If you go to the hourly, you can see we also have, let me get rid of this just to clean this up. You can see we also have negative divergence there on the hourly. So it's right. It's really. Let's see if we have it. Well, yeah, you've got it kind of coming back here, and then that's about it really. It's not really on the hourly, but it is on the daily. So anytime anything's on the daily, that's usually the best from my style of trading. The weekly can take a really long time and it doesn't really give you an accurate entry. The hourly can give you an accurate entry, but maybe a shorter term, smaller trade. And the daily is usually what's good for the bigger swing trades. Okay, so I just drew out this uptrend line right here on the hourly to give you kind of a short-term entry. And we impulsively broke that right there. So to me, starting to take a position, a short position, for a move down to come close to fill the gap or fill the gap, I think is a pretty good risk reward. If you look at basically, let's say we stop out over the highs, let's say we recover and break back above the highs, well, that's a loss of about 8% for if you break above the highs. And if you continue down, it's a gain of about 33%. So risk reward is really good on this, looking for this to continue to the downside. Okay, Tesla. There's not a trade here. I just want to point out we had a pretty big reversal today. This morning I was noticing it was up about 2 to 3%, and then the next time I looked, it was down 2%. So you can see a pretty big reversal, and it put in this big bearish engulfing candle on the daily. We'll see how this closes. If it continues to sell off, then obviously that is bearish. Usually when you get a bearish engulfing candle like that, you wait for confirmation. So the next candle you want to see is being red. So we need to wait for that. If you look at the hourly, we have this short-term uptrend line right here. We're just coming right down to it, holding it as support so far. So again, there's no trade here. It's just a potential. If we get that confirming candle, then that might be a breakdown of the support, and then we run, we start to work our way down. We have a gap down here at 408, so I could see us filling that gap. So we'll watch this one, keep a sharp eye on it. NEO here. NEO actually has a cleaner uptrend line right here. And let me get rid of this. And NEO actually just broke, and it's a pretty impulsive break. You can see a big sell-off candle. Yeah, they'll probably have a little bit of a flag coming after it and then continue. But this is a breakdown of the support, and it's breaking support when you had negative divergence here on the hourly. See it right there. And then if you go to the daily, you can see we also have negative divergence on the daily. So negative divergence tells you that a trend reversal is likely to happen soon, and then you wait for the trigger. To me, that looks like a breakdown trigger right there. There's the, an impulsive break of this. If we get the daily close and it's, down here or even more of a sell-off, a bigger red candle, that would be your sell signal. But as of right now, I see it there on the hourly. So I'm going to take a shot at it again here and see how this thing turns out. Looks like it wants to break down. SQ here looks good for a breakdown. You can see here on the hourly chart, we had this uptrend line right here. Broke it briefly, but it was a false breakout. But this looks like the real deal. You got two big impulsive candles. We'll see if this, we'll see how the day closes. Again, how the day closes is very important, especially when you're trying to time your entries. The hourly can give you a jump on it, but it also reduces your probability that the trade will be successful. If you jump the gun too early and you get a whipsaw signal, you end up taking on small losses. So the daily close is usually pretty key. But sometimes when you wait for the daily close, you miss the objective entry. So it's kind of a balancing act. Sometimes you have to just kind of take a shot at it on the hourly breakdown and then just kind of manage it and watch the behavior throughout the day to ensure you're going to get that daily close you're looking for. But here on SQ, you can see, let me just mark it up and I'll show you guys what we got going on. We've got you can see negative divergence right there on the hourly. So all this price action right here on the hourly has all been divergent highs. We're now getting the breakdown. You have the uptrend line right there that was broken. And then if you look at the daily, you've got negative divergence on the daily as well. Let me try not to delete that. And you can see here starting to turn down as well. You can see, this divergence has been building for some time now. And we're starting to turn down. See how the RSI is turning down? So this price action right up here is a divergent high. Basically, the negative divergence started right back here in August, and every single one of these highs have been a divergent high. Divergence there, and there. And it's just been extending this negative divergence. So now we wait for, the impulsive breakdown. But again, and maybe you have some sort of a trend line like this. I don't quite see it yet, but maybe it's like somewhere right in there. I'm going to leave it off though because I don't have a clean look on that. So we're going to just leave it right here and looking for a breakdown, 134.72, and it looks like that's where this wants to go over the next weeks. I don't know how long it'll take. Someone asked me if I was still short Carvana. I am, and the reason why I can stay short some of these stocks is I don't take a position size that emotionally makes me get rattled. So I'm not too heavy in any one stock where the losses that I see when a position goes against the way I think it's going to go shakes me out of the trade. So that's key, position sizing. And two, the technicals are still intact. So you can see here on the daily, negative divergence, it's still intact right there. All this price action, all these little highs that we've been making, this was a divergent high, and then this most recent move higher was a divergent high. So I'm waiting for, that tells me that the trend's likely to reverse, and I'm just waiting for signals that it does. Now, if you can see here on the hourly, you've also got, you've got a break of this trend line right here, broke and then did a back test, and now there's a clean rejection right there. So nice rejection, just looking for continued downside momentum now. But again, the technicals never changed. This continued to have divergent high, and so it continued to look good to me. I'm looking for further. I'm looking for the negative or the bearish case to continue to build on this. DraftKings here. Someone also pointed out that they thought the negative divergence was no longer intact on DraftKings, and I'm not exactly sure what they were saying. I clearly see, you can mark it out right there. That is, that's negative divergence. Now there is no negative divergence anymore. There's just negative momentum. Let's just put it that way. The divergence was right. This was really the divergence right here. When you made this high, this high right here, it was a divergent high. The price was moving up and the momentum was moving down. So we were diverging, price was diverging from momentum. However, then this high right here was a divergent high. Then you started to get downward price action. So you got this big move down and momentum was moving down. So it's no longer diverging. It's now just negative momentum, negative, it's basically negative momentum is what I see here. Because we haven't made a new high. Now, if we ran up and made a new high, that would be a divergent high, as if it did it soon, and the negative divergence was intact. However, I see price moving down. We haven't made a new high yet, so ultimately, momentum's moving down. Price today is moving down. Obviously, we're trending up right here, but we haven't made a new high. So until we make a new high, it's not divergent. It's just either moving sideways or this is just a counter trend rally in a downtrend. So that's what I'm looking for. And if you go to the hourly, you can see we just continue to kind of walk up this price channel today. They were up above it a little bit, sold it down, and we're just in the middle right now. So kind of no man's land, just letting it do its thing. It's just chopping around. Someone asked me to cover XLV, so here's XLV. This is what I think was happening. To me, looks like we're bear flagging for the next move down to fill this gap at 105.73. So you can see here, flag, pull, and then we're kind of in the flag right now, and then a breakdown of that would put us in. Maybe we'll fill the gap down at 103.65, somewhere one of these gaps. That's what it looks like it's doing, and you can see the price action over the last few days. It's just been flagging out. It's just kind of chopping around this area. So just waiting for it to break, one way or the other, I guess. To me, tells me it's going to break down. We have big negative divergence. Look at the hourly right here. You can see negative divergence. All these little spikes right here were divergent highs. This was a divergent high. This wasn't, because now it did make a new high, and then we've started to trend down. So the hourly has negative divergence. You look at the daily, and the daily has big negative divergence right there. You can see there's a negative divergent. So all this cluster of daily charts, daily candles were divergent highs. So I think we're heading down to fill these gaps. And then I'm looking at 97. That's my target, 97 for this XLV. TLT, long-term treasury bonds. This is actually looking bullish, and I'm actually taking a position in this. I don't like long-term bonds. I don't like the interest rates or any of that, but it doesn't mean there can't be some capital appreciation here. And so you can see here on the daily chart, bullish divergence. All this price action right here is divergent lows, and you got bullish divergence right there on the daily chart. And we're starting to break higher. I'd like to see a break above this 161.20 and some sort of impulsive break. We don't have that yet, so that is something that I would like to see. I see that as longer term resistance. It's below it right now, so we'll watch that. But the divergence is clearly there. So as long as this, if we get some sort of a bullish candle, then that's going to be confirming that bullish divergence. So I'm watching this. And we'll wrap up with gold. I don't see anything else interesting. So we'll look at this gold chart. Gold here, you can see on the hourly, we're cleanly and clearly making bullish divergence now on the hourly chart. So each one of these new lows that gold bullion's been doing has been a divergent low. Now, if you go to the daily, you can see we don't have the bullish divergence there on the daily yet. So what that tells me is if gold wants to kind of bottom out here and then start to rally, what I think will happen is we're going to move up from here, make some sort of a pop higher, and momentum will move up, and then we'll come back and make a kind of a new marginal low, lower than the price we're at now, putting in that bullish divergence on the daily chart. Again, we don't have it there on the daily. We do have it on the hourly. So it tells me that that's likely for at least a short-term move up, and I'm watching for that. The way I'm playing it is with Barrick Gold. You can see we're clearly making this bullish falling wedge. See the bullish falling wedge there on the hourly chart? And we have bullish divergence right there. See the bullish divergence on the hourly chart as well. So we just don't have that breakout candle. But what I'm starting to do is add to my position at the bottom of this wedge. And if you look at the daily, we don't have bullish divergence on the daily either. So it's very similar to gold bullion, where we have hourly bullish divergence, we have a bullish pattern, but we don't have the bullish divergence on the daily. You don't have to have it on the daily in order to get the net, a major move up. It can just show up on the hourly, and again, it's there. So this is a bullish chart. It's a bullish stock that just we're waiting for. If you want to be conservative, wait for some sort of the buy signal, some sort of an impulsive break higher, a gap up, or a big green candle would be your buy signal. And on the hourly chart, breaking above this resistance should set us up for a move, likely back up, well, probably at least to this 23.99, but then likely this could just be the next major trend up. If I go to the daily, just to kind of point out what I'm showing you, gold and Barrick Gold is in an uptrend. So here is the lows back in 2015. Here's a higher low, higher low, higher low. And so if you come, we could even come down even more and make a new higher low, but we're making higher lows and higher highs. So bigger picture, it's in a bull market. And when you get bullish divergences in a bull market and running into major support, which we are, then it is potentially a very good area to buy. You can see here, this this range from 22.65 down to 21.38 is a buy range. This is where it held as support, or sorry, resistance for going back to 2013. For all this bear market price action, it was resistance. You can see all through here, and then we finally broke higher, and now we're coming back in for a back test. So held as a back test there, and we're right back in that area again. So yeah, watch for that. Watch what that's telling us. And that's really all I got, guys. Thank you, and I'll catch you guys on the next one.